What's going on, everybody? Hope you guys are out there making some money. This is Stock Market Jimmy. Thank you for joining me. Let's get started here. I've got another video that I'm going to make for you guys now. And Google's doing good. Google's at $190 a share, so it's finally making a move, which it deserves to. Was selling for way too low. So hopefully you guys out there own a lot of shares of Google. We have discussed Google, and Google was actually one of my largest purchases. I think I paid $154 when I bought Google. So anyway, let's get into a couple things here. I've got two new ones that I want you to pay attention to. Let's go ahead and start with those two. One of them is this company called Lulu. I don't know if you guys remember Lululemon. Lulu had a rough going, and this actually, what I'm about to show you, this just comes from experience right here. So if I look at a 5-year, I'm going to show you something here. Okay, so this is where it's at now. This is where it hit, was the 220. Right now in after hours, it's $225. This stock is down about 35%. So why does this stock interest us when it's down 35%? Why is it failing like that? So let's take a look at it, okay? It's actually 31% over the last 5 years. So let's take a quick look at this. If you look at this bottom resistance, like let's look at these resistance. Okay, so we've got a low here of 261, and as you can see, it went lower than the resistance, and it went to 234, creating a new low, and then it made another new low right here. Okay, so where we are right now. So why is that a good sign? That's a good sign because that's a rebound. So if you come over here and you look, every time it hit low here, what did it do? It rebound. When it hit low here, what did it do? It rebound. When it hit low right here, what did it do? Rebound, came down a little bit, but then rebound again. Came down a little bit and rebound again. So you have that exact same thing here, rebounded, and then you have that large dip, comes here, comes right back, and then it's going to rebound. That's what's going to happen. So this particular stock, I expect this stock to get around the 285 range, possibly 307. Could even go all the way up to 350, guys. Because if you look at the books of what they're doing, the books are good. Okay? They've got 1.1 billion in cash. The total cash is 1.3, so they're basically all the, they don't got it. Basically all the total cash is their liquid cash. The debt is kind of high, 40%. The forward PE ratio is good, 15%. That's good. But guys, this is the one that, this is a part that I really like. Look at this. The return on the asset is 22%. That's high. That's really, really good. So I think that this is a comeback company right here. Now they're involved in the clothing store, and I did go to their online website. I went to lulu.com. I was shocked on how expensive they are. I mean, just a t-shirt is like $68. A pair of women's sports pants, like those tight ones, it's like $112. So Lulu is very popular with women, but what it is that they have good quality workout clothing. They've got good quality products. So their t-shirts are high quality. And the women know this. And one of the things that you have to remember, one thing about women is they spend money on stuff. They don't analyze everything like a man, like, oh, $68, I could get that for 24. No. If women like something and they like the brand name, they're going to support this company. So look for Lululemon to make a little bit of a rebound here. And also, you have to also remember that we're getting late into the year. So we're almost going to be here into August, the 8th month of 12 months. And what does that mean? We're getting closer and closer to our holidays. Christmas, Thanksgiving. What do women do? They buy gifts. So I expect clothing stores to do well during the holidays, especially these online stores. Okay, let's move on to the next one. Oh, real quick, guys, do me a big favor and hit that like button. And if you haven't subscribed to the channel, please do so. It's a new channel. Let's see here what we got here. We've got another one I want to show you is right here. Okay, now I'm going to give you some advice on this one. Yeah, look at this. It's getting beat up in the pre-market, guys. It's getting beat up in the pre-market. It went up like $2.84 yesterday. And in the pre-market, it's literally given up every single thing. It's given up all 7%. So this one has been struggling, which is why I'm bringing it up to you. They're down 34%. All right. Now, here's what you have to understand about these energy companies. This is a solar-powered energy company, okay? This is a solar company. You have to understand something, that the amount of energy that we are going to need to be able to energize and to be able to sustain our AI technology. That's why China has such a huge advantage over the United States right now when it comes to creating power. So we have to be able to create power. So no matter what happens, we need every ounce of energy that we could possibly get our hands on. So companies like this should thrive. Now, what I want to warn you about, I do not recommend that you own this stock going into October, November, December, and January, because all solar type of companies are going to, they're going to struggle during the winter months. It's a seasonal product. So what that means, though, is that you can make a note to yourself and monitor this company, put it in your portfolio as a monitored stock, as a watch stock. And that way you can remember, hey, I always want to take a look at how low this goes in the winter. And if you can invest in it before the summer starts, you're going to do well with the summer as it comes back and it starts making some money. Let's take a quick look at the upside to this stock, okay? So now what you're noticing with this one is the last low part, you had a very small upward rebound. You had a very small rebound. So it technically hasn't even rebounded from the last dip. I mean, look at this. It just went down even more. So here at $81, it had a nice rebound up to 130. So, I mean, that's a huge rebound, right? That's why I'm trying to tell you guys is that you've got to pay attention to stuff like this, because this is where you make your money. You don't want to always be buying these hype stocks where everybody and their brother's buying them and they've went up $30, $40 already. You want to be able to analyze stocks before they go up. So, this could be a stock where you end up having it go back up to 160 to 125. I mean, guys, that's a lot of money, man. A lot of money. You don't even need it to go that high. I mean, if it goes to $70, you're ecstatic. So put this one under your watch list, guys. This would be a good one to watch. Let's look at a 1 year. Okay? So, I mean, even if it goes to here, that's $63, man. You're talking almost a double up. So pay attention to this one, but remember what I told you. You don't want to own it around October, November, December. You don't want to own it around then. So you might be able to get into it like this time of the year and make $10 a share on something like this. But just pay attention to it and monitor it, okay? All right, let's talk about some other stuff here. Finally, Symbiotic pulled back a little bit, guys, but then it rebounded well again. It rebounded well again, and as you can see in after hours, it's up even more now. So, or in the pre-market, I'm sorry. So I'll tell you what happened yesterday to it. Let's take a quick look. It went as low as $46.40. I think it's something like that. It's not really showing that here, guys, but it did. It went to like $46.40, and I was like, wow. But now it's coming back, so it's already literally come back like $4 already. So what it basically did was it did a shakeoff. That's exactly how stocks are intended. That's why sometimes it's difficult to get the full maximum potential from a stock that you own. Sometimes it's easier said than done, and everybody's situation is different. So I'll give you an example. Let's say you got $1 million. You're wealthy and you got $1 million into the market, and you've got $100,000 in Symbiotic, and you got $1 million total that you have. So you have $900,000 on the sidelines. So if you bought it, let's say for $27, and it goes all the way up to $54, and then it starts coming all the way down from 54 to 46, do you know how much money that every dollar that it's coming back down that you're losing back? I mean, you're not really losing the money. You're giving back profits is what's happening, So sometimes you have to really, if you believe in the stock and you know that the price that you're holding on based on what you bought it for and what it's at, you believe in it, that you know it's going to go up higher. If that's the case, you don't worry about the $4 or $5 that it gives back. You just don't worry about it. And the next thing you know, it's gotten back to 54, and then the next thing you know, it's at 57. And that's what's definitely going to end up happening with this stock over time. I don't know when it will go to 57. It could be in a month for all we know. But if you're in a different situation where you only have, let's say, $30,000 to your name in the stock market, and you own $30,000 worth, those profits that you had are crucial. So it's much more difficult for you to hold on. A lot of you guys in those situations would sell. And when you sell it, you keep all the profit that you had. And you have to remember, as you're building wealth, every time that you generate money and you build your nest egg, you got to remember and you got to look at it that when you rebuy stocks, whatever stock that you end up rebuying, you got to realize that you're getting it at a discount because of the free money that's built into your costs. So for example, let's say that somebody made $10,000 and they buy $30,000 worth of stock. $10,000 of that stock that they just bought is pure, it's free. They didn't pay anything for it. So if you analyze mathematically how much you're really paying, the cost for the shares is super low. So you got to keep that in mind. When you do sell, you have bigger buying power. So it's stages. And then I'll teach you guys also that once you do get money, how to protect yourself with the money. So I will be putting together a course package that you guys can purchase to support the channel, and you can get it through my website. Okay, so I'll fill you in when that's ready, guys. For right now, it's a new channel. I want everybody to just support the channel by subscribing. All right, so let's go ahead and talk about something else real quick. A stock like, for example, Soun, don't get FOMO, okay? Don't get FOMO, guys. Sometimes when you want to get into a stock and then it comes down, it has one day. I mean, guys, this stock only came down 3%, all right? So this stock, don't get FOMO, all right? Let me share something with you, okay? The stock is already up 30% over 5 years. In 1 year, It's up 127% in 1 year. Well, I got news for you. You missed that. So it's irrelevant on what it did because you missed it. Unless you are somebody who benefited from it and bought it way down here at $5. Okay? All right, now, don't panic and be like, oh, I got to get in, I got to get in. You can't be in the stock market that way. You have to treat the stock market as you do everything that you can not to buy. I repeat, in the stock market, your philosophy should be you do everything that you can not to purchase. So what that does is it makes your buying very strict. So here's the reason why. This is where the stock is right now at 1148. All right? Assuming that, it opens here. So if you look, that's not too bad overall in the last year. Overall, I would be okay with you purchasing the stock at this price. It's not a great deal. Okay, it's definitely not a great deal, but it's not the worst deal in the world. And if you come down here at 755, which is right here where our mouse is, if you come down there at the $8 range, you need to be prepared that in worst case scenarios, this stock could hit $8 to $7 if we have a big pullback or something happens in the market. Now, that's not the end of the world because you can hold. But what do I teach you? What do I always tell you? What happens is it ties up your buying power and it puts you on the sideline where you're stuck on stupid. You're stuck on stupid when that happens because you're stuck like Chuck and you can't do anything with that money. Now, if you have enough money, that's a different story because then you could buy more. You could buy another 30,000 when it's down at the $7. That's the way you play the game. So there's so many different things that I can teach you guys and talk to you guys about, which I'll put in the whole training package, okay? All right. Now, look at a 5-year. Now it's a different story on how much you're paying right now. Totally different story. So if you come over here and you look, where would you really want to be on this trend of all this graph, this chart? I'd want to be right about here, which is $6.24. Do you see what I'm saying? So is it going to come down to that? Probably not. I mean, not anytime soon, probably. So you could probably justify hoping that it comes down to the $8 range. If that doesn't happen, maybe like the $9.30 range. I would be comfortable around there. All right. Now, if you absolutely believe in the stock and believe in its future, which a lot of people do, that's up to you. If you buy it, just make sure you're prepared to buy more and have enough money to continue to buy the $2-3 dips down. All right. I sold Honest Company yesterday. I sold it. I did another. Guys, I'm making a killing off this stock, guys. And boy, did I, this stock has a lot of money invested in it right now because it keeps doing big chunks of 18 cents a day. And as you can see, it's already up 10 cents in the pre-market. But sometimes, that can be a little, tough to analyze because I don't really pay too much attention to it. Now, if this had 5 minutes before the market opens, then I would take it seriously. But with 2 hours, I'm recording this at 7:30 in the morning, and the market doesn't open for 2 hours. So I wouldn't go too crazy about expecting this to open at 10 cents over market was closing. So we did good on this stock. I think that I owned 11,123 shares, and I was at 440. I made 34 cents per share times 11,123, and it was only a 2-day trade, 2 to 3 day trade. That's it. So that's called a swing trade. There's no specific deadline on a swing trade. Swing trades can take anywhere from an hour to 3 months. There's no set time for a swing trade. It is, you get out of a swing trade when you accomplish your goal. Okay, let's see what else we got here, guys. SoFi is doing very, 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 very well. For those of you that listened to me when I told you to buy this one, that was at about, what, $10 or something like that a share, you would have already doubled your money in a very short period of time. So would I buy and recommend SoFi right now? No, I would not. I would not recommend it at this price. I just wouldn't. Just being honest with you. We're way up here. Sorry. I'm just not going to recommend this. Could it go up higher? Sure. I don't, I'm just not in the business of, gambling. This isn't gamble with Jimmy. Okay. What else are we going to talk about? This is a good one that I want to show you guys. I think that this is a solid buy right here. Okay, this GitLab. Okay, this is the reason why, guys. It's down 51%. Now, if you look at this thing, it hasn't done very well over the years. You got all the way from a long time. This thing has not really done all that great. But it has that potential to get into that $60 range. So I don't think asking for $60 a share is out of the question. I think it's very, very realistic that would happen. And it's a good, strong company. Let's take a look at the 1 year. It's down 14% in a year. So look where you are on the price chart for 1 year. You're pretty good here, guys. Pretty dang good. And it's a decent stock to own. So I think that this would be a safe play. I'm not a financial advisor, so there's no guarantees on what I tell you. I'm just talking to you guys from experience, okay? I'm happy with this particular ownership of this particular stock at this particular price. Could you get it for $44? Sure. I just, there's no guarantee that you will, OS. Let's talk about OS real quick. It's called OneStream. Tell you what, man, this stock is just, if you're a shareholder with this stock, you're kind of frustrated a little bit, guys, because it just cannot get going. It just stays at the same, it almost trades as if you bought a ETF or something like that. It just is not moving. It shows signs. It gets up to 25.55 and it's right back to square one. You know what I mean? It comes down to 24.89 and then it goes right back to 25.20. It could though. It could finally make its move, and this is definitely a stock that I'm going to give you a thumbs up on, that I want you guys to pay attention to. So, look at the last dip here, guys. When it hit 18, it went flying up after that dip, okay? So you guys could totally wait for it to dip, come back down to like 22 or even 21, and then boom, you could catch it for like $6 or something like that. But it has the potential to be a $45, $48 stock, in my personal opinion. So they do, I told you guys about this one, they do financial AI software. So look out for this company. Okay, guys, that's going to wrap up today's session. I'm basically just kind of keeping my eye out. One last quick thing that I'll share with you guys is that what I would recommend that you get in a habit of doing is pick your top 14 stocks, write them down on a sheet of paper, and have every single entry that you want to accomplish where you would come in and buy it. And what you need to do is you need to monitor those 14 stocks every single day to analyze the consistency of them. And when you do something like that, you can take a stock like Honest Company, and I know it like the back of my hand. to me, this stock is used to make $20,000 a month consistently buying and flipping it. It's kind of, this stock reminds me of a cryptocurrency. It really does. It moves like crazy. Look at this thing, okay? I mean, look at this thing in 5 days. It just went straight up like that. So let's look at some more time. Now you got, look, from here, you got $5.15. Whoop, comes all the way down to $4.41. Whoop, goes right back up to $4.77. It's like a seesaw yo-yo, all right? Look at the 6-month history, okay? You're way up here at the top, 669. Slowly kind of went down in bunches here. Let's see, it typically rebounds. If you notice, it always seems to rebound when it does that straight down, and you start seeing it kind of go up again, you jump on that bandwagon, man. And so here you had a crash, and now you get in that bandwagon again going up. Now, who knows how high it's going to go? For all we just don't know. We just don't know. But it's a good swing trade type of stock. So just don't force things with it, and don't worry if you end up getting into it. Let's say you bought it for $4.54 and it goes down to like $4.24, which it hasn't done that in a while, but let's say that it did. You can't really panic. You can consider, obviously continuing to buy more as it dips, but what you want to do is you don't want to panic or anything like that. Just remember that when it does start going up, it has a history of rebounding nicely after dips. It has a history of doing that. So keep that in mind. All right, guys, thank you so much. See you guys on the next one. Appreciate the support.